Hello, this is Roger Royce, host of the 10,000 Startups podcast. Trump v. Harris tax policy. This is one of a series of presentations that I hope to give, at least be two of them. But I thought we ought to do one in particular solely on tax policy because the candidates differ so very much on that issue that there's a lot to talk about. And in the next podcast, we'll be covering um, artificial intelligence, immigration, energy, climate, a lot of other issues of interest to startups. But for now, I want to talk about where the candidates are in tax policy. Now, this is a really hard thing to do because I've read both of the platforms and they're very vague and ambiguous, as they have to be for political reasons. Because I think if the candidates get too specific about tax policy while campaigning, it would put everybody to sleep. And they don't want to do that. But I don't mind. So I hope you can stay awake, or I'll try to keep this interesting enough to keep you awake. Will I talk about where I think the candidates are or where they'll come out on tax policy? The second thing to keep in mind is that this is a shapeshifter, right? Some of the views tend to evolve, and also there are new views that get proposed fairly frequently, issues that we hadn't heard about, ideas we hadn't heard about, and who knows, this could be obsolete by the time I post it. And then thirdly, if there's anything here that you disagree with or you want to comment on, go ahead and put a comment in the comment section, and I'm happy to take a look at it. But let's try to keep this kind of, I don't know if we can keep it non-political, but I'm going to try to, just the facts. So Harris v. Trump. So let's start with where I think Kamala Harris is going to come out on this. And I'm basing my assumptions here on what she has said most recently, proposals she has supported in the past, and the Biden agenda. Now, as a general rule, I will say that Kamala Harris has supported higher taxes on both businesses and individuals than Donald Trump or even Joe Biden. That has historically been true. And I'm going to get into the detail of that in a minute. So keep that in mind. Now, she's walked some of that back just like really recently, that today is October 14th. But, we still have a guideline. So the Harris proposals. Now, we can, specifically with respect to Kamala Harris, here are a few things that sort of are related to startup. And I'm only talking about startups here. I'm not talking about big companies. I'm not talking about individuals. And this one is sort of related to startups. She co-authored a bill that would deny deductions for expenses incurred in defending harassment and discrimination claims. Now, Code Section 162Q already denies deductions for costs of sexual harassment claims if there's an NDA in place. This law would have expanded that to include employment discrimination claims. It was co-authored, by the way, by a Republican senator from Alaska. And I think that gives us a good idea where she stands on this. I say it's sort of related to startups because it kind of depends. You may never have one of those claims, or you may be doing business in California where one's almost guaranteed eventually. But that's where, and it also sort of illustrates a fundamental philosophical policy difference between these two candidates and these two parties. In fact, this is one where Kamala Harris has shown that she's not afraid to use the tax system to try to influence policy, because the point of denying these deductions has to do with tipping the balance in terms of how these claims get settled and resolved. So I'll leave it at that. Second thing, under the LIFT Act, Kamala Harris has been, and she has recently, again, been supporting increased tax credits, in fact, refundable tax credits for individuals. I won't go into the details of that, just to say that this is an increase in an individual tax credit.
Someone's at the front door.
And the refundable tax credit would have cost around $3 trillion. How is she going to pay for that? By the repeal of the Tax Cuts and Jobs Act of 2017, or I should say the law generally known as the Tax Cuts and Jobs Act, which was enacted and signed into law under President Trump. President Trump believes in keeping that Tax Cuts and Jobs Act and, in fact, expanding it or extending it, because many of its provisions are going to expire in 2025 if it doesn't get extended. So that was her proposal, is to repeal that law. And I'm going to talk a lot more about it in a minute. except for those making less than $100,000. Now, she has recently said she would honor the Joe Biden pledge not to increase anybody's taxes unless they make more than $400,000. So I assume that applies to this. And then I don't know how the numbers work out in terms of paying for the tax credits. Does it change the amount of the credit? Or do we have additional taxes on people making 400,000? We just don't know, but directionally, that's where we are on this. Thirdly, Kamala Harris supports Medicare for all, which is super expensive, and she has proposed paying for it by imposing a 4% tax on the income of anyone making more than $100,000. Again, and this is the cost of this is astronomical. So now that she has said she's not going to walk back Joe Biden's pledge of not increasing taxes on those making less than $400,000, how does that affect this tax? Does the tax have to go up? We don't know yet. So we'll see if this changes anything. Although I seriously doubt you're going to get any more specificity in this during this election. But just understand the general idea is Medicare for all and pay for it with a tax on anybody making either more than $100,000 or more than $400,000. Now, let me kind of go through a couple of other issues where, and this is what I know Kamala has come out and talked about. Let me go through a handful, about a dozen other issues, which is my speculation based on the Joe Biden plan as to where I think she'll end up. Well, the first one is not speculation. Joe Biden proposed raising the top marginal rate to 39.6%. Kamala has supported that. Again, it might be even higher if she adopts the Biden idea of no taxes on anyone making less than 400,000. But for sure, raise the top marginal rate, and that's what would happen if you repealed the Tax Cuts and Jobs Act. By the way, no capital gains rates. It was a Biden proposal. In other words, for anyone making more than $1 million, Joe Biden would have said your capital gains are taxed at ordinary income rates. By the way, this would have eventually been a tax on carried interest distributions at ordinary income rates. So that is one that I think Kamala Harris would definitely support, since Biden did support it. This is one that's, I don't know, it's not getting a lot of press because maybe it only matters to a small group of startup company founders and investors, but qualified small business stock. You all know what qualified small business stock, QSBS, is. And if you don't, we've done several podcasts on it. And I've got one coming up again because it is a huge driver in Silicon Valley. And most of my startups issue stock that is QSBS. And that means that the holder of that stock, if they hold it for more than 5 years, and if we meet several other requirements, they sell the stock, they can exclude from federal tax up to $10 million or 10 times basis from federal tax, $10 million of gain or 10 times basis from federal tax. That means a zero federal tax on gain from the sale of qualified small business stock. This is a huge incentive, a huge incentive. Just imagine. And in fact, I know people who pay a zero federal tax rate on their income, venture capitalists and professional investors, because all they invest in is QSBS. And if they happen to live in a state that doesn't have an income tax, which is where a lot of my clients went to when they fled to California recently over the last few years, they end up in a tax haven. They pay zero federal and state income tax. So it's a big deal. And it is absolutely important to investors. It's important to founders because they're going to exit their company someday through an M&A. And it's a really important provision that's been around since the Clinton administration. Biden has proposed, most recently, limiting that exemption to rolling it back for anybody who makes more than $400,000 again. Now, that proposal of his did not make it into the Inflation Reduction Act. I don't know why, because I was following it closely, and one day it just disappeared from the public view. But I got to believe that that's going to be back on the table again under a new administration, under Kamala Harris's administration if she gets elected. The other thing Biden proposed was denying that exemption for stock held by a trust. Well, that's odd. That's kind of an odd, arcane thing, isn't it? Not at all, because as you'll find out if you listen to our next podcast on this topic, with trust, a person can multiply that exemption over and over and over and over again, right? So instead of getting one $10 million exemption, you set up a trust for your 10 grandkids, and now you got 10 of them all of a sudden. So we'll talk more in detail about that in a couple of weeks. But I'm just saying, even though no one's talking about that now, because it's one of those technical, hard to understand, very, very specific to a certain demographic thing, I'd pay attention to it. Corporate rate, Kamala Harris has proposed raising that to 35%. It is currently 21%. Biden had proposed raising it to 28%. Donald Trump has proposed lowering it to 20%. Now, what's interesting about this is whenever we talk about changing the corporate income tax rate, this will surprise you. It's not that big a revenue raiser as you might think it is. I mean, most of the revenue comes through individual income taxes. And secondly, there's a real question here as to who ends up paying for that. Is it the shareholders or is it the employees? I mean, where does it come from? Whose ox gets gored? And that's always a debate. And I think a lot of people would say are resistant to raising the rate because they see that as really just disadvantaging the employees of corporations. So we'll see where that goes, but that's where the parties are on that issue. The estate tax. Well, you're a startup company. You don't have anything that reaches the level, and you're not planning on dying anytime soon. And you've got nobody to gift any stock to. So you're not worried about the gift and estate tax, but hopefully someday you will have to worry about that because you'll have a big estate and you'll want to do something to basically minimize the estate and gift tax, which is probably the truly most voluntary tax we have in our federal system. Well, Joe Biden had proposed an expansion of the estate tax, in particular in a couple of ways. One, with respect to the amount of property that can pass exempt from the estate tax through gift or through bequest on death. And secondly, through taxing property at death as though it were sold. Because currently under the law, property gets stepped up to its fair market value at death. You might have an estate tax at death, but you don't pay an income tax on property. But his proposal would tax it as if it were sold for anyone who more than $5 million per donee or per person per heir, we'll say. Well, I expect Kamala Harris is going to fall in line and adopt that proposal as well, but we'll see. Obviously, the Republicans do not endorse any sort of expansion of the estate tax. I'll talk more about that in a minute. The 4% Medicare tax, we talked about that. That is not a Biden proposal. That's a Kamala Harris proposal. Kamala had also proposed a financial transactions tax on Wall Street transactions. That's not startup land, so I'm not going to talk about that. But if you happen to be in that space, you might want to look into that. Kamala has been silent for the most part on international tax issues. I don't blame her. It's very complex. Biden, however, was not, and he had proposed doubling the GILTI tax. Now, we could spend an hour talking about GILTI, and if you go on my YouTube channel, you'll find me talking about GILTI for an hour easily. But let me tell you at a high level what it is. It's the idea that the U.S., and this is part of the Tax Cuts and Jobs Act, came into law under Trump. It's the idea that corporations should not be able to avoid tax entirely on income that's sitting in a foreign country in a foreign subsidiary if it's this mobile type of income related to intangibles. It's the global intangibles tax. So, and this doesn't apply to income, most income from other sources like tangible property. So the GILTI tax is 10.5%. So that income gets taxed back to the United States shareholder corporation, whether they get the cash or not. At 10.5%, Biden would double that to 21%. I will tell you that that is huge. The GILTI was a huge game changer in international tax planning. It certainly changed a lot of what I used to do with startups in terms of setting up offshore IP holding companies and things like that. Just so you know, proposal is to double that. Here's the big one. Here's a big one. Anyway, in some circles, Biden proposed a wealth tax. Well, I'll call it a wealth tax, but it was actually a little more novel than that. It was a tax on all income for anybody who's worth more than $100 million in wealth. Now, we've done presentations many years ago on wealth taxes, how they've been applied in other parts of the world, some of the state proposals to adopt wealth taxes. And this is one I want to call out specifically because you're thinking, I'm not worth $100 million, I'm just a startup. But if you happen to watch the hour and a half long Andreessen Horowitz presentation on who they're voting for and why, they called this out as one of their top 4 big issues. And according to, I believe it was Horowitz, who said this wealth tax will end the venture capital industry. Now, so I'll just leave that there for what it's worth. That's what he said. So that's why it's relevant to startups. I will say that wealth taxes are problematic. They're hard to administer. They're hard to define. The devil's always in the details. And historically, I don't think they've worked very well in the European countries that they've been applied. But nevertheless, that proposal is out there. We might see it again by Kamala, a proposal by Kamala, since Biden has proposed it. Okay, the Tax Cuts and Jobs Act. I mentioned this before. I want to mention it again because this is the biggest difference between the candidates. Tax Cuts and Jobs Act was enacted under President Trump. Many of those provisions are going to expire at the end of 2025. President Trump would like to make it permanent and also to make a few modifications that I'll talk about in a minute. But Joe Biden had said that he would let the Tax Cuts and Jobs Act provisions expire, the ones that are going to expire, except for people making less than $400,000 a year. And Kamala has recently said she'd respect the $400,000 pledge. I think that's what she said. So we'll see. And I'm going to get into that in detail in just a minute. I want to get through a couple other things. Actually, I want to get through one other thing. 1031, one of the things the Tax Cuts and Jobs Act did is that it limited the application of 1031. Joe Biden has proposed an additional limitation. This is like-kind exchange. An additional limitation. This is the idea you can trade real estate for other real estate and not pay tax. Again, for wealthy people and for higher, bigger amounts, Biden has proposed limiting 1031. It's not a startup issue, but it's something just to be aware of. Finally, before I leave the Harris positions, or what I think are the Harris positions, let me just say a word about tariffs. They're not taxes, but they're close enough I want to mention them. Donald Trump had implemented a series of tariffs when he was in office. They stayed there when Biden came into office, and Biden, I think, was all for them. I don't know where Kamala Harris is on this, but she has stated publicly in the past that she views tariffs as just another tax on American consumers, which is not very positive, right? And kind of the opposite way that Donald Trump views them. So we would probably see her have a different position on that, but I don't know until she comes out with something specific. Okay, let me now turn to Donald Trump's positions on things. As I've mentioned several times, Donald Trump was in office. He signed into law the Tax Cuts and Jobs Act of 2017, or the law known as TCJA. And that law, let's just kind of walk through the major provisions. Number one, it set the corporate tax rate to a flat 21%. As I said, Kamala Harris would like to raise that to 35%, and President Trump would like to reduce it further to 20%. I've already talked enough about that, so enough said. Second thing was the pass-through deduction for qualified business income. There's a 20% pass-through deduction for qualified business income. And what that means is for some businesses, that small businesses in particular, that are not in a certain set of services, specified services, can their income is going to be taxed at a high rate of 37%, the highest marginal rate. This is a deduction, a 20% deduction on that income, and it phases out as taxpayers earn more and more income. So it's designed to benefit small businesses. It's a mainstream business type deduction for pass-throughs. Not many startups are pass-throughs, or you shouldn't be, but nevertheless, it's there. Again, Kamala would like to repeal that. President Trump would like to make that permanent. Another one is the SALT cap. This is a state and local tax deduction cap. This is one that the Tax Cuts and Jobs Act limited to the deduction for state and local taxes to $10,000 per taxpayer. And nobody thought a lot about that, I think, until they actually went to pay their taxes and realized what a big deal that is in a state like California or New York. And there's a million workarounds, and it's complicated. But I will say that that is part of the Tax Cuts and Jobs Act. And that's one that I think might be dealt with separately outside of the law itself. But we'll just have to wait and see. Individual income taxes, Donald Trump would like to make the 37% top marginal rate permanent. As I said, Kamala Harris has proposed raising that. Capital gains, this is interesting. So as I said earlier, the Biden plan would have gotten rid of capital gains if you make over a certain amount of income. Donald Trump's plan would be to keep the capital gains rate, but would effectively lower it by indexing gains for inflation, right? And given where inflation is right now, that could be a big deal, but that would effectively lower that 20% rate. And this is totally independent of the qualified small business stock exemption that we talked about earlier. We've already talked about the estate and gift tax provisions. Trump would make the Tax Cuts Jobs Act provisions permanent. Biden had proposed changing those. I assume Kamala would as well. We talked about the 25% unrealized income tax, capital gains tax for taxpayers who have a wealth of more than $100 million. President Trump opposes that. And I don't know where Kamala is on that. I assume she'd support the Biden-Harris agenda. And let me just give you a couple of other ones. There was an interesting tax that came in with Biden. It's a 50% corporate minimum tax rate on large corporations, right? They're way out of startup land. Startups don't make $1 billion a year, so I'm not going to talk too much about it. But that was a tax that came in under Biden. Also, 1% stock buyback tax for more than $1 million of stock buybacks. I'll just say those were two Inflation Reduction Act provisions that came in. Now, there were a handful of credits because the Inflation Reduction Act had many provisions aimed at energy. And I'm going to talk more about that when we do the session on energy policy. But who knows what would happen to those under President Trump or under President Harris, either one. I suspect that they would stay in place under President Harris and may or may not stay in place under President Trump. We just don't know. I do know that there are a lot of clean tech companies and clean tech investors that are waiting in the wings, waiting to see, and are a little bit on pause right now because some of those credits, those green energy credits, are really important to their businesses. Finally, I can't help myself. I do have to talk about this idea of no tax on tips, even though it has nothing to do with startups, unless startup is your side hustle and you're relying on tip income otherwise. This is something proposed by President Trump. The unions in Nevada lobbied Kamala Harris, so she adopted that idea as well. So now both presidential candidates are proposing this. I will tell you that it's a little bit dubious tax policy. I'll just say it that way, because as a lawyer, I'm already thinking of ways that we would get around that. And if we assume an economically rational workplace, we would see a lot of money move from salary income to tip income. And then wages would go down in the restaurant industry. And then people would say, well, gee, why do restaurant workers pay a lower rate of tax in their income than those of us in our rideshare industry or whatever it is? I think that's going to be a hard sell in Congress. I don't think that one's, I'm not saying it's impossible. I'm saying a whole lot more detail is going to have to be put around it. And I think we haven't really shined enough daylight on that idea yet. It's an interesting idea. I understand it, but I haven't seen enough of it to say that I think it's going to be good policy or policy that would get through Congress. We shall see. And the last two things that I would say, I'm going to editorialize a little bit. I guess all of this is editorializing. Is that let's put the Medicare for all aside, because that's a humongous number and it's going to require a new tax. I can see why the 4% tax has been proposed. Let's put that aside for a minute and talk about just the one kind of more basic issue that clearly is at stake in this election, and that's the repeal of Tax Cuts and Jobs Act. According to one measure, it's House Ways and Means Republicans, they say that's a $7 trillion tax increase. And I don't know, we'll have to see the numbers, but that's a big number and that's a big deal. And the Tax Cuts and Jobs Act was really a big law, a big provision, especially this 20% pass-through entity tax, not so much in startup land, but more over on Main Street. So I think that's going to be one of the big defining factors in this election. And the other thing where I might be a little critical is the pledge to really restrict any tax increases to people at a certain income level. Well, I totally understand it. I will say that statistically, only about 2% of the population makes more than $400,000. So if you're going to restrict tax increases to that population, that's not a very broad base. And it certainly does put a lot of pressure on that base for any additional cost of running the government. And I think we're going to have to let the Excel jockeys and policy wonks take a look at it and figure out just how bad it is. But I think these are high level platitudes because we're in a campaign. But once we get down into crunching numbers and running details, you might see some completely different ideas come out of this. All right. And with that, I want to thank you. Make sure you tune in to our next podcast where we start to get into some of the other startup issues, AI, cryptocurrency, technology regulation, immigration, energy, climate, stuff like that. All of the stuff, FDA, one of my favorite topics, and maybe we can cover the rest of them in one podcast. This is Roger Royce, 10,000 Startups. Thanks.